Hello and welcome. You're watching us here on Chartbusters. I'm Manglam Malu. Joining me today is Ekta Batra. It's a Friday today, and in case you got up an hour late for the markets, you haven't missed anything because the Nifty, the Sensex, as well as the mid-cap index, absolutely flat as it can be, virtually unchanged from yesterday. It's just the Nifty bank which is underperforming a tad. But then again, maybe it is Friday, so some sort of consolidation on the cards. Hi, Ekta.
Hi, Manglam. Yes, and after 8 straight days of a gain, it's okay if we take a breather at this point in time. So we're just about consolidating at this point. So we'll take that with both hands. At least there is no kind of, selling which is taking place in the markets at this point. But nonetheless, for the Bank Nifty, there's a tad bit of an underperformance. So it's down around 0.3%. We have a lot to discuss in terms of specific stocks. It might be flat for the indices, but there is a lot of movement which is taking place in specific stocks. In fact, these are top stories at this hour. ONGC is the top gain on the Nifty 50 after the government cuts the windfall gains tax on crude exports. Crude prices rebounding 4% overnight also aids sentiment.
In the broader markets, we do have Tata Chemicals surging almost 4% after the stock is removed from the F&O ban list. Remember, it's surged almost 35% in the last 1 month.
Large trade in IIFL Finance, 3.7% equity worth 475 crores, exchanged at 345 rupees per share. 4% equity also traded in a large deal in CAMS at a rate of 2,320 rupees per share.
Well, IRCTC holds up almost 3% as the Rail Ministry responds to reports of plans to shut down ticketing counters, clarifies that there are no such plan in the works.
And IEX opens lower after the Power Ministry bars 13 states from power exchanges. Stock recovers off lows into positive territory after 6 states move off the ban list.
Well, we were talking about how the indices are flat, but a lot of individual stocks are doing extremely well. Go Fashion is one of them, which is up almost 10% as we speak. The cement pack has been doing well all since yesterday, the second half, and now we're seeing some extended gains on names like Ambuja Cement, ACC from the broader markets, even something like Sagar Cements and Sangi doing extremely well as well. So is it still going to be a stock pickers market? What's the outlook for the indices themselves? What are the charts saying? Manas Jaiswal joins us. Manas, some sort of exhaustion after a big rally on the frontline indices, would you say? And what are the stocks that you have?
Good morning, Mangalam. So yes, Nifty is facing some resistance near 18K mark. But again, if you're talking about the trend, I think the trend is quite bullish. Nifty is making higher tops and higher bottoms. This is a consolidation phase in a bull market. And I feel that Nifty has potential to test 18,100, 150 marks. So I think at current levels or on a small correction near 17,925, one can definitely take a long position with a stop loss of 17,825. I believe that soon, after some more consolidation, you can see a breakout and Nifty can test 18,100. So I'm quite bullish on the markets, and I would recommend a buy on a decline.
Okay,
so well, 2 recommendations.
Sure, go ahead, Manas.
So I have 2 buy recommendations in large cap space. So first one is a buy call on L&T, where we have seen a lot of buying interest in last 2 trading sessions. Stock has already given a breakout on the charts, and I believe that stock has potential to test 1965. So here one can definitely create long position. Stop loss should be around 1904. And after some correction, I see some strength in INFI. INFI has taken support near 200 moving average. And today's stock has given a fresh breakout on the intraday chart. So take a long position in INFI also. Stop loss should be around 1590 and target would be around 1625.
Okay, just a quick last word, Manas, which I wanted on Adani Ports. The stock has been, in fact, a rank outperformer on a week-to-date basis. It's gained close to 11%. What would you strategize on that?
See, I believe that Adani Port is traveling towards its April high of 925. So even from current levels, you can see almost 50 rupees downside. But after a smart rally, I think one should not create fresh long over here. But if you're long, then definitely you can hold it. You revise your stop loss towards 855.
All right, we take that point. Let's move away from the equity markets for a bit and let's get talking about commodity markets. Manisha, It's Friday. What's the one commodity that you're tracking today?
Well, I'm looking at the rubber prices, and they have been declining every day of this week, so much so that we are trading at a 19-month lows in the international markets right now. It is a weak demand that the markets are concerned about right now, and the major cues clearly come in from China, where the auto sales are estimated to be cut by nearly 500,000 units in this year itself, and that is exactly what they are looking at in sense of the commercial vehicle sales as well. For this year, that target also has been put down by nearly 16%. When you look at the rubber prices itself, well, we have seen a week-on-week decline by nearly 2% come in for that one, 3% rather. On a month-on-month basis, we are down by nearly 7%, and it has turned negative on an year-on-year basis as well. You should take a look on how the rubber prices actually have ranged in this year. So we started with 175. We saw a high of 185 in Feb, but as of now, trading at 145. That is the low of this year, and that's currently where the prices are trading as well. So clearly at the lowest point in this year. When you look at the Indian rubber prices, well, the last 3 months have been nothing short of a decline here as well. June was 177 rupees per kg. We saw it decline to 175 in July. And in August, the average price until now is 167 rupees per kg. This also is a peak season. We are looking at tapping continuing, and that also seems to be putting some pressure on prices. But the Rubber Board of India has come out with the estimates for this year in sense of production and consumption. While the production clearly has been increasing on year-on-year basis, so has been consumption. And this year, we are looking at a newer high onto that one. This is a breakdown on how you could be looking at rubber demand for various sectors. So auto clearly is a big jump up in this year. So the Indian demand does look positive there. And when you look at rubber general goods, last year was a contraction of 16%. But this year, a gain of around 5.5% is what is expected. So even as the rubber prices have declined right now, as I said, it's a seasonal thing. But the demand, the consumption numbers do look strong.
And that's reflecting in the tire stocks as well, Manisha. I know Apollo Tires, if you just take a look at it, not today. Today it's down about 1% or so. But this week itself, Apollo Tires is up around 12-odd%. MRF2 is the other one, despite the chunky weight that we have. That's today. If you just take a look at the last few days, Apollo Tires has been rallying. MRF is up today. In this week itself, that stock is up 6%. So 6 to 10% sort of gains coming by in all these tire stocks, as Manisha has been saying.
Yes, absolutely. Rubber prices at 19-month lows. I just want to pull up Sun Pharma, which is one of the stocks that I'm tracking. In fact, it is the Mohali 483 that the stock is probably reacting to at this point in time. You can see that little bit of dip which has come in for Sun Pharma. Remember, the Mohali plant, which is an ex-Ranbaxy facility, was inspected from the 3rd of August to the 12th of August. It was issued 6 observations by the US FDA. And we do understand that the 483, according to people who've seen it, is not looking as great in terms of a resolution. For example, it's 8 pages. That's not indicative of how serious it is. But nonetheless, people who've managed to look at it have indicated that it could be something which could take a longer time to resolve. That stock in focus on account of that. But let's shift focus now to our special segment where we get you a few ideas for profit from Money Control Pro. Madhuchanda Day of moneycontrol.com joins in now to talk about a stock that she is tracking closely this Friday.
Safari Industries rode the upswing in travel business in the first quarter very well, with reported revenue much higher than the pre-pandemic level. Safari appears to be gaining market share from unorganized players as well as competitors, thanks to its established presence in the value segment. The company also managed its operations very well to report a sharp jump in operating margin, thanks to a reduced sourcing from China, better product mix, and periodic price hikes. Higher reliance on own manufacturing for hard luggage and third-party sourcing away from China is structurally positive for margin. The strong industry tailwinds should support earnings growth in the future. After a sharp rally in the stock in recent times, investors should look for softness to add this stock.
But let's talk to a couple of companies and about a couple of companies. Cartrade Technologies has delivered what is a strong set of earnings for Q1, with revenues jumping 47% on a year-on-year basis. Here to break down the numbers for us and the outlook going ahead is the company's CEO, Consumer Business, Banwari Lal Sharma. Hi, Mr. Sharma. Thank you very much for taking the time out. You know, your average monthly users, in fact, went up quite handsomely. It was up around 25% on a sequential basis. Tell us, what is the outlook for the remaining part of the fiscal? What is the trajectory that we can expect in terms of addition of users for you?
Good morning, Ekta. So the numbers typically for us, they follow a certain trend, as you see. India typically sees pre-festive a certain incline in terms of launches of cars. These launches of cars and bikes typically bring a lot of people, onlookers and buyers, everybody, to understand what exactly is happening. So they would like to know about the cars. And this is precisely, there were good launches, a few good launches that happened last quarter, and that gave us the jump. We see this like a yearly affair. To be very honest, AMJ quarter, the first quarter typically is the lowest for us for any set of numbers because we have a certain amount of seasonality. The industry doesn't do very well. And monsoon is about to hit. People don't buy cars as much. But the Q2, wherein we see a build up towards festive, and Q3, which typically hosts festive, and then the Q4. This is how the build up happens, and we foresee a very similar trend this year as well.
All right, but when we are looking at your listings, etc., that has declined almost 16% quarter on quarter. Is that again because of seasonality? What's the outlook that you have on that one for this year? And also on volumes via auctions, can you give us a sense?
So, Mangalam, the listings is a function of market demand and supply. As you see, let's say in last few quarters, India has been witnessing a very, very slow growth on the new car side because a chip shortage was quite prevailing. Used cars picked up because people had those cars to sell, and the demand was very strong. Now, this decline that you see is a function of number of people willing to sell their cars, which is again a function of number of people looking at buying a new car. So to me, the build-up is now happening as far as the Q2 is concerned for the festive, and these numbers we see going up again. Though these are not the numbers, let's say, which is really, let's say, an impact for us as business line item. Typically, we have a couple of big opportunities. One is the OEM spend, which is your digital advertising or advertising in general, which has been going up. Last year, we kind of crossed pre-pandemic levels. And this year, we are expecting something like 15-17% growth on both in terms of OEM spends as well as a digital share within the OEM outlook. So that should help us. As far as auctions is concerned, that particular part of business, I don't really concern. So I would actually refrain from answering that particular part of the question, if you're okay.
Okay, all right. So you don't want to comment on auctions, but you are quite bullish on the used car business. There is a Nomura report which estimates that it'll probably be around 4% of your revenue by FY24. What is it currently, and do you think that's a fair assumption in terms of the used car business?
No, so I think Nomura would have talked about the new business we are launched recently, Upshore.
Yeah.
Used car business is already a much higher percentage in our business. But if we talk about Upshore, that's a massive opportunity for us. Multiple reasons. One, of course, used cars in India has been, let's say, still kind of making its pace. It's still not there because the trust, which is fundamental to buy a used car, is still missing. So when we came up with the idea about a couple of years ago, we thought that let's put Upshore on a platform wherein everybody should be able to buy a car with confidence. And we put all these, let's say, right ingredients. You can take the car, try it for 7 days. If you don't like, return it. A full year of warranty, a comprehensive warranty that we offer. So many, let's say, checkpoints. So that is one business which we've already incubated. We have about 50 locations. We have physical outlets, and we have a full-fledged digital solution out there. That's we are very, very bullish about. Not to take away credit from the marketplace. We remain to be India's one of largest used car marketplaces, and that business is going to grow multifold as well.
So what's the kind of opportunity that you foresee out here? And secondly, even in the car, your car wale business, etc., what is the kind of opportunity that you foresee? I mean, what is the annual percentage of car purchases made via your or car purchases made via going to your platforms, etc., and what would your share be here? Because I'm sure a lot of competitors are looking at this space, and we do have a lot of other companies also, announcing, a lot of the startups, etc., announcing their foray into similar businesses.
So, Mangalam, to be very honest, I think we are very lucky and very well poised to be a dominant player in the new cars and new bikes business. We have one more company as a competition largely, and then we can call, let's say, Google or Facebook as a competition. But otherwise, I mean, it's not really easy to build a business like this. We sit at 40 million plus monthly visits on Carwale alone, another 20 something, let's say, on Bikewale, and then we have Cartrade. You put all this together, this takes probably decades to reach where we are sitting today. So it is not a business which can easily be, let's say, replicated, or a startup can come and disrupt. Having said that, the opportunities you asked, fantastic opportunities. Two things which I already talked about. One, the annual OEM spend on, let's say, automotive has been fairly stagnant because India didn't really grow as far as cars were concerned, new cars selling is concerned. We had GST issues, we had BS4 to BS6 transition issues, we had EV confusion in this entire market. All of this is cleared. Tailwinds are now really, let's say, supporting the industry. 5,500 to 6,000 crore of OEM spend on advertising. We foresee it to reach something like 7,000, 6,500 crore this year. That is one support. Second, we were always getting about 16 to 18% of digital advertising out of this space. We're getting about 16 to 18%. We foresee that to go to 18 to 20% in a year or two. So to us, these are two big levers on the advertising space. Also, we don't just work with the OEMs. We also work with thousands of dealers on the new car space. And we have personal individual relationships with them, and they continue to grow. So we are quite diversified and quite defensible as far as new car and new bike business is concerned.
Okay, all right. So we're going to leave it on that note. Thanks very much for joining in and speaking with us. Well, interestingly, Cartrade, in fact, listed just exactly a year ago on August 20th, and its issue price, to put things into perspective, was over 1,600 rupees, and currently the stock stands at around 622 rupees.
Well, some weaknesses set in from the market from the time we started the show. Not too much, but a 30-point dip on the Nifty, led lower by all the FMCG stocks, and HDFC Limited, that's the one which is lower by almost 1% or so from the highs. Currently sitting at the low point is HDFC Limited. But the stock that we're looking at is Sun Pharma. Ekta, you did allude to the US FDA issuing a lot of observations for its Mohali unit. What have you made of those? Six
observations for its Mohali unit, and that we already knew. So this particular Mohali plant, remember, has already come with issues in the past, which Sun Pharma had managed to resolve once they took over Ranbaxy. In 2013, it was issued an import alert by the US FDA when it was a Ranbaxy plant. After that, it was lifted in 2017, and it was re-inspected, but I think there was a long gap because of COVID-19, and now that is one of the re-inspections which have taken place, resulted in 6 observations. It looks like it's probably going to be a little bit of a long road ahead for them to solve the issues on the Mohali facility. That's what the observations are indicating, as per the people that I've spoken to, especially in terms of the first observation as well. I just want to point out that this particular piece of news comes for Sun Pharma just a couple of days after their Halol plant, in fact, just this week, continues to be classified as official action indicated. So that too is an important facility when it comes to the US markets, and it had an OAI status a couple of years ago issued to it pre-COVID, and since then it was the first inspection post-COVID, and that too continues to be classified as OAI. So it seems as though there's a combination of bad news when it comes to
all right. We'll monitor that as we go along. With that, we wrap up on this edition of Chartbusters. You stay tuned. Trading Hour comes up next.